Thursday, December 22nd, 2022, Monaco 64, home of alternative economics and contrarian views. Probably some of you have heard the term being used right now. It's called a clown world. and yes, there are things happening that we thought would never happen maybe 5, 10 years ago. And it's all really crazy. Of course, some of the people out there don't see it like that. They've been kind of mesmerized by the our powers that be, our politicians, our central bankers, our mainstream media. And what we're going to look at today is that this is actually a symptom of a collapse of society and the collapse of the currency. And that's what I'm going to focus on today. And before I start, of course, we're going to look at the questions from last week. So one thing I would like to say about the questions, there is a place on my YouTube channel where you can go and into the email for the channel, but it's only for business inquiries. It's not for me to answer your questions through that email. If you want me to answer your questions, there's a few avenues. It's through the comment section, of course, and I try to answer as many as possible, and I try to collate as many questions as possible and do this question and answer here. And then you can also, if you really want your question to be answered, to be guaranteed to be answered, you can join my Patreon. Yes, it will cost you, but I can't be answering hundreds of questions through email. So let's start with the questions. We're gonna do about, I think we're gonna do about 4 today. So let's share it with you on the screen. I've decided to use my Zoom today. Let me know what you think. I'm using this microphone because I usually do my videos with my iPhone and a smaller microphone. So this is why it looks different. Question 10. Hyperinflation comes like a thief in the night. Joanne Wolf. I have a question. If one holds physical gold and silver, which we all know have been price manipulated for years, won't they continue to be price manipulated, and even more so in CBDCs? And worse, when CBDCs come in, US dollars begin to deteriorate further in value, going to zero. Won't that affect gold and silver values as well? That is, if you have to raise money quickly outside the system, who's going to buy your gold and silver? If it is a dealer, they would have a choice to buy either in old dollars or CBDCs. Either way, if precious metals manipulation continues, the sellers will be screwed. Your thoughts? You could say that you can spend silver or gold coins between individuals or use it for barter. But as far as raising money quickly with your precious metal savings, one could be stuck. Well, the first thing I would say is that using gold and silver for a transaction is not barter because they're money. So they're the most marketable commodities. As for the manipulation, manipulation never lasts because it creates shortage, and eventually the price rises, just like it did in the 70s. They manipulated it with the London gold pool in the 60s. They were running out of gold, so they had to let the price higher. Yes, they have controlled the price, but the price has still gone up quite a bit, and I expect it to do so. And as for dealers, if there are dealers out there that will buy gold and silver, there will always be. And yeah, I don't think it's a problem, to be honest. So let's go to question 11. Many of the top financial advisors like Peter Schiff, Greg Manarino have advised investors to purchase commodities like gold, silver, oil, natural gas, aluminum or aluminium, as the English would say, copper, uranium, etc., for the coming commodity super cycle. However, these stocks are down nearly 40% from their highs in April. when the stock market tanks, will these stocks be liquidated to cover short positions in other stocks, thus sell off for the markets? KC Culp. Um, yeah, that's a good question, KC Culp. But one thing I would say, and I'll share the screen here. Let's have a look. Uh, let's go. Okay. So this is the Bloomberg Commodity Index that tracks the major commodities, and it's up, as you can see here, 14.15% year to date. And you say when stocks tank, won't commodities come down? Well, the Nasdaq is tanked like 30% year to date, and commodities are still up. Yes, there will be commodity stocks that are going to be very volatile. I think over the long term, they will do well. And why? Well, because investors will realize that they need to diversify away from the usual suspects that have worked for the last, let's say, since the '08 crisis and the beginning of the current bull market, if you want to call it. And if you have just a few percentage points of assets or money coming from the general sector into commodity stocks, uh, I think it's possible that they still do well. You look at it, look at in the '70s, the general stock market went sideways, lost a lot of ground in terms of real terms because inflation was very high, and commodities, especially gold and silver and miners, did very well. So we're not here to give you the exact entry points and exit points. This you have to do it yourself. We're just talking about the general idea, and I've been saying this for about 3 years as well, that hard assets will outperform. So that's that. Let's go to the next question. Okay, there's let's here we go. All right. Number 12, excellent. This is from a global gold rush from Cairo to Vienna. Question 12, Mario, excellent coverage as always. Had to comment twice because the Austrian pensioner section hit the nail in the head. We regular folks, at least me, can smell the BS, the MSM pedals. But what really took me aback and got my attention, Rabo de Bui, was the fact that Japan was mentioned. Was it that the Austrian is so popular there? Are Japanese stacking? Those massive fiat savings over there start converting to gold will be interesting. I know they're savings society, but do they stack? Europeans instinctively turn to precious metals. Boris Buliak. Yeah, the Japanese do stack, and if you look at the price of gold in yen, it reached an almost all-time high this year, or very close. I think it did around 250,000 yen. Yeah, I'm not surprised that the Japanese do stack gold and silver. So question 13, serious question. How does anyone know how much physical gold the central banks have in their vaults? Sue Warman. Yeah, that's a good question. Yeah. There's always been a lot of debate about whether the US has all that gold in Fort Knox. That's the Treasury, right? The New York Fed has gold in its vaults for other countries. Yeah, I guess that's a very good question. Never thought of that. And yeah, who's to say that all those official gold holdings that we see for the US, UK, Italy, France, Germany are correct? So I'll that's where I'll stop here with the questions. Going back now to the clown world. And many of you know that I've been reading about monetary history for about 20 years. We've gone over the symptoms of hyperinflation. I'm going to put a video up in the card so you can watch it. And many of you hopefully have read When Money Dies by Adam Ferguson. Many of you have read Fiat Money Inflation in France by Adam, no, by Andrew Dixon White, sorry. And hyperinflation or currency collapse does not happen because of a strong economy. It happens because inflation graduates or the public realizes, as von Mises talked about in his definition of a cracker boom, when the public realizes that governments are not going to stop spending and inflating, and the central banks are not going to do anything about it, they lose faith and confidence in the currency. They want to get rid of the currency as quickly as possible for real things, and I think we're going to enter that. And it's not just an economic phenomenon; it's a loss in faith and confidence in our leaders. And I see this all over the place, and I know that, as I said earlier, that many people are not awake and they don't see it. But I think you and I see it. So I want to share some of the examples of the clown world that I see that sometimes makes me frustrated and angry. But I think we need to not be angry and frustrated, not to be fearful, because actually currency collapse, it will be very disruptive. But I think it's a good thing. It's going to clean the slate and get us off in the new path, in the new beginning. Eventually things will improve. What we can't have is keep going in the same system that we have now. So this morning I saw this because when I turn on my computer, I get this Apple news because I have an MacBook Pro. Do I really look at this and read? No, but I saw this picture here. As you can see, I mean, this is clown world to me. And then, yeah, so that's the first clown world. The other clown world I saw, and I saw this yesterday, and I'll share it with you as well. This is why I've done this on Zoom, because there's so much out there that, in my opinion, is like a clown world. So let's have a look. I'll share another one. This one here. There you go. I remember a few months ago when he just become king after his mother died. We were told that it was going to be a low-key coronation for King Charles III, but now it comes out the king rejects cut-price coronation in favor of glorious pomp and pageantry. Monarch wants to use ceremony to showcase UK PLC internationally, despite being deeply conscious of the cost of living crisis. So that's another example of clown world. He is a guy who's completely not living in the real world, who doesn't have to pay taxes like we do, who didn't have to pay inheritance tax when his mother died, who runs a business in Cornwall that is basically that he doesn't need to keep any books, doesn't pay any tax. And his idea of selling the UK is through pomp and pageantry, as he says. And the other thing this does, and let's have a look at another thing that makes me think we are in a clown world, and I'll share it with you again. Here we go. So I'm not saying that the people who are striking are clowns, but it just goes to show our leaders have their priorities wrong. We have to go back to 2008 for that. We bailed out the banks with hundreds and, well, almost £1 trillion now, because the Bank of England's balance sheet basically has ballooned to like £1 trillion, mainly to keep the City of London going. And yes, there are good parts of the City of London in terms of the financial sector, insurance, but a lot of it is just a casino where they gamble with derivatives and they create no real social good for the country. All they create is risk. And so here are all the strikes by the people who really uh, keep an economy going, I would say. So why do I think this is a clown world here? Well, because you've got people like King Charles III saying he wants pomp and pageantry. He wants to spend, I don't know how much is going to be, hundreds of millions of pounds just for a coronation. And you've got important parts of the economy here: health, education, transport, postal, courier, legal, civil service, all on strike. This is just in September. There's a strike every day. So that's another reason why I think people are losing faith and confidence in our leaders. And don't forget, King Charles wants to spend trillions as well in the climate change agenda. So let's continue here. There's more, unfortunately, clown things to show you. Some of you may think, well, Mario, you're a free market guy and everything. Yeah, but in terms of the post office, I think it's a utility, really. But here we go. Royal Mail staff warned company and fight for its life as more strikes loom. So we sent millions or tens of millions of pounds, maybe even hundreds of million, to the most corrupt, one of the most corrupt governments in Europe, for a war that we shouldn't really be involved in. And we can't even save the post office. I know they basically privatized it, but it's a 506, a former monopoly, 506-year-old. And I remember back in the 90s, the first class stamp was about 20p, 20 pence. And now they're talking that it's going to have to go above a pound. So has this privatization of the Royal Mail really improved things? I don't think so. So now let's keep going. Oh yeah, this is the big one here. And it applies to Americans as well, because yesterday, of course, we had this 1.7 trillion spending bill go through in the US right before Christmas. It reminded me of the Federal Reserve Act, which passed on December 23rd, 1913. But here's the clown world again. Yesterday, we had data. The budget deficit was the highest ever in November. So public sector borrowing hits record November high. And here we have King Charles III talking about pomp and pageantry, spending hundreds of millions just to put something on his head. While the foundation of our economy, the people who keep things going, can't even survive, that they have to stop working, to strike, to demand higher pay. And one thing I would say, one of the reasons why the public sector workers are having to strike is that the government's become so big. We spend more than 50% of GDP. We tax we've taxed the private sector the most in 70 years. And that they're trying to squeeze the public sector, because the public sector, of course, has to be funded by taxes. And we have to go back to 2008 when we bailed out the City of London. And we bailed out also, I have to say, people with big mortgages. And we bailed out the housing sector. So let's quickly go through this here. UK public sector borrowing nearly tripled in November, following government measures to shield households and businesses from soaring energy prices and higher debt interest payments. Public sector net borrowing hit 22 billion last month, nearly 3 times the 8.1 billion reached in the same month last year, the highest November borrowing since monthly records began in 1993, according to data published by the Office of National Statistics on Wednesday. So, as von Mises says, in human action. There's only one where there's two ways to stop the inflation, and this is inflation, people. Deficit spending. It's to stop the deficit spending, to bring the collapse the economy basically, and shrink the size of government, or to keep going and eventually the currency collapses because people realize that uh, the government will never stop doing this. So that's why I say we're going to have a currency collapse. I don't know when it's going to be, but right now you can still prepare for it. And I'd like to thank my affiliates, Gold Investments, one of the oldest bullion dealers in the city of London. They've been there for over 40 years. You can use my promo code Monaco64. The how to get in touch with them is all below in the description. You can talk to Oliver or Simon Temple in North America. My affiliates are Miles Franklin and ITM Trading. And the how to get in touch with them, of course, is below in the description. And I think while you still can, and this is not advice, I think it's still, yeah, you still have time to protect your savings if you've been fortunate enough to be able to save. And I'm not saying selling investments or stocks, but cash in the bank, I think, is under threat, not just maybe from a bail-in, but also from continued purchasing power collapse of the currency. Well, if you have been acquiring gold for the last few years and you're in the UK, for example, this year gold is up over 10%. So it's kind of protected you versus the rising prices. Yes, in the US, gold is pretty much unchanged. Silver is actually up a little bit on the year. So I actually think, despite all the rate hikes, all the QT that central banks have done, gold and silver have held up really well when you look at the stock market and the bond market. So that's what I wanted to say there. There is more clown world that I wanted to show you, but I think this is enough for now. And I think, yeah, that 1.7 trillion spending bill in the US. I saw that Rand Paul came with a wheelbarrow. There's 4,000 pages, and the people don't even have time to go through that. So that's the way things are, and I don't see it improving. If the US, the UK, or even Europe wanted to stop the inflation, they wouldn't be spending trillions like they are right now and backing a corrupt uh, government out in Eastern Europe. No, they would be looking after their own people. And unfortunately, that's not happening. So let's look at where the markets are, and I'll share with you the screen that I usually use. So you will see it here, where things are. We'll go quickly through it. It is 20 past 8 a.m. London time. So you can see here, spot gold is at 18.1940. It's up $5. High's been 20, low 12. Yesterday, the high was 24. I told you about that 25 level. Again, it's going to be the same level. Silver is at 23.90 there, just below 90, down 8.5. High's been 24.10, low 23.72. I think yesterday and today, yeah, gold and silver are kind of consolidating. We've had nice moves higher, and I think eventually the currencies will go lower, and precious metals still the place to be. The Dow futures, you can see, is up 85, Nasdaq up 44, S&P up 13. So let's quickly go through the currencies. We got sterling here is up a little bit today, 0.5%. It was down significantly yesterday. I think we got down to like 120.50, and now we're back above 121.37. The euro is up as well, 0.5%, just under 0.5%, 106.50, right near the highs. So the dollar's down against the yen, as you can see, and the dollar's down against the Swiss franc. The Chinese yuan as well. It's pretty much unchanged. Check those other currencies here on this side. Aussie dollar is up 0.75%, as you can see, 67.58. The dollar is down a quarter versus the Canadian, as you can see here, 135.76. And the Kiwi dollar is up a third at 63.16. Quickly go see where platinum is here. There's platinum. It's 1,005 bid at 1,009, up $5. And crude oil, WTI crude is up 0.5%, 78.60. Brent is up a third at 82.75. High grade copper, as you can see here, is up slightly, and US nat gas as well is up 1.8%. We're going to look at the bond market before we finish here. We're going to look at the US Treasury market, and we're also going to look at the UK gilt market. So I'm going to share with you first the Treasury market. Here we go. So this is where I usually look. So as you can see, the 10-year yield is at 363. It's down 5 basis points. It had gone up to around 370 yesterday, and the day before we have been as low as around 348. So it's still higher than earlier in the week. The 2-year note yield is at just around 420, as you can see, down 2. So let's now go to the gilt market. And gilt yields yesterday were rising quite sharply. Let's see what they're doing this morning. Okay, there we go. UK government bonds. 30-year yield, I think yesterday got just below 4%. So yeah, they have come off a little bit. They're at 387. The 10 years at 358, pretty much unchanged. And the 2-year as well here is down 1 basis point. And the 2-year is important because they base mortgage rates off the 2-year. So with that, I'm going to wish you all a great rest of the day. Yes, for Christmas, I'm doing my video tomorrow. We're going to do the Mike and Mario show for Saturday. But as I said, Sunday is Christmas Day. I won't be doing my live stream, and probably won't do anything on Monday because it's a holiday here. We're going to be with friends. So there you go.